you go from not making too much money to start making a bit of money. Let's say you make £5,000. You're not used to making £5,000. Then your mind goes, I've just made £5,000 in 1 month. I'm not used to making that in a job. How can I make 6,000? How can I make 7,000? And you see what's happening here? What's happening is you've gone from a process that gave you that £5,000 as a side effect outcome to now going from process mode to getting the outcome to then outcome mode, to focusing on more outcome. And the funny thing is about that is it might seem logical. Well, how do I go from 5 to 7? It's the wrong type of mindset. You're just going to push it further away and probably end up with nothing. Hello guys and girls, and welcome back to another episode on the Falcon YouTube channel. As always, we really appreciate the love and support that you give us on a regular basis. So I want to thank you all for tuning in. If you're joining us on the channel for the first time, make sure that you are subscribed to the channel. You're in the loop with all the things that we've got and you've been enjoying the content. You kind of make your way through that. We've had some really exciting episodes recently. Now this episode, which is really important, do's and don'ts of full-time trading. Now, a few of these can kind of be implemented into trading generally as well, so you'll take value from it regardless. But I'm excited to get into it, because I think a lot of people make these mistakes. And if you're someone right now that has these goals and ambitions to be a full-time trader, then you're going to want to make sure that you're doing the do's and not too many of the don'ts. So let's get into it, starting off with the do's. So what are the things that you want to make sure that you're doing? Well, I'm going to give you 3 things. Now, first up, ask yourself the question, why do you want to be a full-time trader? Remember, just being full-time trading is kind of a buzz phrase right now. It doesn't mean that you actually have to trade full-time, because what does that actually mean? You know, if you're trading, you might take on average 10 trades per month. You're not going to be by the screen all the time, so you want to have things in place. So the first part of the do's is potentially even have a part-time job. So firstly, you want to ask yourself, do you want to be a full-time trader? And then look from a perspective of, if you can have a part-time job while you're trading, then you've got that income. So you've got, let's say, your part-time job, something you actually really enjoy, by the way, not something that makes you miserable. So something that you really enjoy, you're happy doing, it promotes something to do with your other goals, it increases your lifestyle. You might, for example, be a PT, right? Well, being a PT, you're gonna keep fit, you're doing some good things, you're helping people get into shape, you're earning a part-time income while you're actually learning to trade. So then you've got your part-time job income that's actually taking care of your expenses, your outgoings, you're removing the pressure, and then at the same time you've then got your trading income. So it's a good way to complement it from a period of time. And you also want to make sure that if you do go full-time trading, regardless of whether you get a part-time job or not, you've at least got 6 months of savings to cover your outgoings. This is an absolute do. And the reason why you want to have that is that you don't want to be putting unnecessary pressure on yourself just by performing every month, because I've been there, it was horrible, and I wouldn't wish it on anyone. And just because I was able to be so accurate, I was able to get through it. But again, if I didn't get more capital, it would have been a downward spiral. So don't put that type of pressure on yourself if you don't need to. Second one is routines. You need a solid routine. You need to remember what got you there in the first place. Most people forget. They do what they need to do, they follow the process to get the outcome. Once they get the outcome, they start focusing on more outcome, and they forget the process that got them there in the first place. So solid routine. My routine went completely out of whack. A lot of people that have experienced this and that have gone full time had exactly the same thing. Their routine, it just goes completely out of whack. And the reason as to why is that you just suddenly get all this freedom and you think, oh, what do I do now? And then you start waking up when you want, doing what you want, when you want, and that actually starts to affect your results. So get a solid routine. Some people take 3-4 months to figure that out. So if you can start to implement that now and work your way into it, you will thank yourself so much more by having that really great routine. And that routine can come in the form of your evening and your morning as well, by the way. So again, you want to make sure that that is completely on point. So full-time trading as an absolute do, you want to make sure that your routine is on point and you've got that fully on lock. The last thing of the do's that I want to cover, which is being surrounded by like-minded people and improving your mindset always. So you want to make sure that you're doing this. And the reason as to why is that, remember, even at an institutional level, someone's not just sitting on their own in the bedroom or on a desk trading just by themselves. They've got other people to bounce energy off. They've got other people that might be hedging and other people that are trading high risk. Whatever it is, whether you're in a prop firm or you're going to be surrounded by different people, right? Because you're with people that are on the same mission as you, have similar type of mindset and skill sets. And the reason that's why that even happens at institutional level, because left to your own doing, you'd find a way to mess it up. You know, you want to save yourself from yourself. And it's the reason why we are the average of the people that we spend our most time with. They say 5, right? It's because you want to make sure that you're not just listening to yourself, you're bouncing energy off of other people as well. It's really, really important that you have that inner circle. You have like-minded people around you that are on the same mission. And most people forget that. You know, if you was just a trader, and I've been there before, where it's so lonely, so lonely. I remember when I went full-time trading, I was utilizing my brother's office, which was a 24-hour, by the way. I would literally go there in the evening, and then I would end up trading the Asian session. Don't ask me why, but I would be there and I'd be trading on my own. I remember, because these communal areas, they had like the vending machines and all these kind of things. I remember I'd be just sipping a coffee, looking at the vending machine, decided whether I want to get something, and I'm thinking, what am I doing? It's 2 a.m. But I was just trading the Asian session, and it was because, again, I didn't have a solid routine. I was left to myself, and it started to get a bit lonely, if I'm completely honest. And that's what happens in trading. It's like you need to save yourself from yourself. That's why being an independent trader doesn't mean trading on your own in your room by yourself. Being an independent trader is independent thinking. That's where people get this very confused and misguided. Being an independent trader, you can be an independent trader around 50 other people. It's, do you have the independent thinking to follow your strategy and your plan without being influenced by others? And if you can't do that and you are influenced by others, then you've got some work to do on your internal. You can't just keep avoiding situations, because everybody trades slightly differently, even with the same strategy that you might be learning. So it's important that you understand yourself within your plan, and that you're not getting influenced by anything else. You want to build a tough mindset. Otherwise, you build this kind of fragile mindset where you try to avoid everything. And if the ultimate goal was to just trade by yourself on your own, isn't that the opposite to freedom? You know, you want to be around people on the same mission as you, same mindset. So an absolute do, wherever you're trading, whoever you are, wherever you are in the world, get around a big, good group of people that are pushing you to new limits every single day, every single week, holding you accountable. It's one of the biggest factors for a lot of our success. So it's tried and tested, tried and true. So those are the do's, the absolute do's for full-time trading, to make sure they all link together and they all complement each other. Now let's talk about the don'ts. These are the big ones, so let's get into those now. So the first don't go living a laptop lifestyle straight away. See, this is what happens instantly, because what you're sold and what you see online is laptop lifestyle, trade by the beach, all of this kind of stuff, and it's going to send you down the wrong path. You've just become full-time. Arguably, you almost need to go back to the beginning. You need to go back to basics. You need to rebuild, as if you're starting your business from scratch. You wouldn't then go and book a holiday. This is what most people do. I'm full-time, they just start increasing spending, all that kind of stuff. Before you know it, laptop lifestyle, they're in Bali somewhere trying to trade and realizing that it's not working. It's because, again, you've literally just gone full-time. Don't rush it. And this is a common mistake that I see, and then those people end up coming back, getting back into the routine and realizing it was right under their nose in the first place. So a big don't is that don't go living the laptop lifestyle as soon as you go full-time trading. Build some foundations first, and at a later stage, once you got that on point, you got some consistency, being full-time as well, you got that ability, well then you can adapt and you can travel and set these things. But at the beginning, I highly encourage you to get in a solid routine first before you go and do that. Number 2, let's get into that now. See, this one is a big no-no and a pure amateur move. Don't increase your spending as soon as you've gone full-time or as soon as you start to make more money. This is ridiculous. And this is when, if you're not coached on money and you've not got your money game right, well then you would do this. It's natural human psychology to do it. It happens all the time. Think about it in a corporate world. Think about it in just, you know, a normal job. Someone gets a promotion, what do? They go and treat themselves, reward themselves. There's nothing wrong with treating yourself, by the way, so let's get the fine line between it. But going from, let's say, you get a promotion, you start to earn a little bit more money, instantly you go and buy a better car. Instantly you start booking more holidays. You start buying more aftershave or perfume. You start buying more shoes, more trainers, more clothes. You instantly upgrade your lifestyle the moment that you get it. Why? Because it's a void. You never had it, so you feel the need to indulge and binge straight away. That's not going to get you business results longer term. That's normally this need to just impress others, or you just want to treat yourself, and that's natural. I understand it, I get that as well. But you don't want to be going and doing that in the same time that you've literally just gone full time, you've just made a little bit of money, you're upgrading your lifestyle, you're eating in fancy restaurants, you're buying a new house, buying a new car, you're increasing the pressure on yourself straight away. And you don't want to be doing that almost instantly. And the thing is, this happens a lot with people, and the reason as to why is because of those reasons. You know, it's human psychology for this to happen on a regular basis. But you want to make sure that when you go full time, you're not increasing all of these spending and all these kind of things, because that is what is going to put so much more pressure under your belt. And think of it like this: if you've just had, let's say, a couple of months of gone full time, you're like, right, I'm a full time trader now, I'm trading £250,000, whatever the figure is. You have a good month or a fairly good month, you make a little bit of money, you're not used to making that money, you then start spending that money, so already it shows me that you don't have that long-term thinking. And then secondly, what if you go into drawdown? What if, let's say, that for 2 months, because it can happen, or you just have a bit of a rocky period and you go into drawdown. Now you're thinking, well, my outgoings have now tripled because I technically could do that then, but now I'm under this pressure. Then you start making emotional decisions, and now you're trading for outcome versus process now. So you're forgetting what has got you the results in the first place to get you to full time, and now all you're focused on is upgrading your lifestyle, and it's normally because of social media. You need this validation. So again, you want to be secure in yourself and start thinking about, well, full-time trading, let me build up 6 months of consistency as a full-time trader, and then set these little milestones of rewards to treat yourself. I've stuck to my plan consistently for 3 months. Let me go and treat myself to something, or then I'm going to upgrade my car, for example. Like, give yourself a little bit more time rather than as soon as you get money, it's like boom, 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 boom. You now have a higher ratio of outgoings than what you did before. You know, let's say, for example, you're used to making £2,000 a month, and now you're making £4,000 a month. Your outgoings may be £1,000. Well, now making £4,000 a month, your outgoings are now, you know, 3,600. So your ratio is higher. So you're actually spending more in terms of the percentage of how much your income is. And most people don't realize that. So it's a massive don't. And I highly encourage you to do that, because if you want to be a trader for 5, 10, 15 years, then you don't even be making these amateur mistakes as soon as you start making a little bit of money. And again, you need the guidance for that. So if you've never been in that position, then you can easily make those mistakes. It's not your fault. I've been there as well. So it's just about understanding, massive don't. Give yourself a little bit of time, reward yourself. I promise you it will be so much sweeter in the future. And the last point, this brings me on to the third part, is to make sure you don't forget what got you there in the first place. So this is a massive don't. You want to have your routine so on point, you want to have your mindset on point, and you want to be following exactly what got you there in the first place. You have the recipe. So the moment that you go off of that, and we tend to do this because this happens, because what starts to happen is this: you go from not making too much money to start making a bit of money. Let's say you make £5,000. You're not used to making £5,000. Then your mind goes, I've just made £5,000 in 1 month. I'm not used to making that in a job. How can I make 6,000? How can I make 7,000? And you see what's happening here? What's happening is you've gone from a process that gave you that £5,000 as a side effect outcome to now going from process mode to getting the outcome to then outcome mode, to focusing more on more outcome. And the funny thing is about that is it might seem logical. Well, how do I go from 5 to 7? It's the wrong type of mindset. You're just going to push it further away and probably end up with nothing. So it's about understanding, don't let these little self-sabotages go in, and make sure that you are in that process mode that is getting you the positive outcome that you've already got right now as a side effect, and not switching into that outcome mode, because you see that a lot. And that is human nature. You know, you make £50,000 or £20,000 or £10,000 in one day or on one trade or in 1 month, you're naturally going to think, well, look, that's my level now. How do I get to £15,000? The funny thing is, that's going to push it further away, because that's not how it works. That's not how trading works. Your outcome will be a side effect of how proficient your processes are, which is what got you there in the first place. So we can kind of test this to all areas of life. You would never forget what got you there in the first place in other areas of life, whether it be fitness, gym, whether it be mindset, whether it be this, whether it be relationships. You wouldn't forget what got you there in the first place. But when there's money involved, we tend to make those decisions because we're influenced by our desires and money. But you want to get that in check, because if you're actually serious about building long-term generational real wealth, then you will do that. If you're just here to flutter and a little bit of flirt, you want to have a nice car, you want to show off, you want to do these things, yeah, you can do that short term, that's fine. Longer term, you realize it's not the answer. And I'm speaking from experience. So I can only share for you my experience and what I've seen, and I'm surrounded by some very, very wealthy people, far beyond my wealth, super successful people. And if there's anything that I've learned from those people, is that they still remember what got them there in the first place. So it's something to ponder on, something to think about, and we can kind of get lost in that, especially in this kind of social media world. So guys and girls, I really hope you took a lot of value away from this, the do's and don'ts of full-time trading. There's a bit of everything in there, a bit of a blend, but I hope you took away the 1% tweaks from it. And I highly recommend that if you're serious about going full-time, really think about the things that I said. Don't just listen to this for the sake of listening to it. I want you to take the value so you can actually benefit from this and actually apply it. That's the whole point of the channel. That's the reason why we wanted to create this in the first place, because these are just general observations. I mean, we're not talking about the strategy here, but all of these components that I'm talking about, it's crucial. However you're trading right now, you can take this advice and follow it for yourself. And I promise you, if you really, really take it on board, you'll see some big, big changes in your trading, and you'll be overall happier and confident. Remember, the more confident you are, the more confident you are to actually execute and achieve what you want to achieve in the first place. Guys and girls, as always, appreciate the love and support. Thank you for tuning in. Hope you have an incredible weekend ahead. Let us know in the comments your takeaways from these do's and don'ts if you have any others as well. And as always, we'll see you in the next episode. Have an incredible weekend. Take care, everyone.